So what does it take to meet the three financial objectives: profitability, liquidity, and balance sheet health? In short, a lot. And that's why finance is such a critical and multifaceted function. Let's parse the various activities that fall to the finance function. There are 6 groups of activities. Some relate to running the business and some to planning the business. Running the business requires transacting on behalf of the business, managing the business's funds, and then recording and overseeing all of this. Planning the business requires forecasting and a host of analysis-related activities. And of course, there's the only thing as certain as death: taxes. Finance is responsible for managing the company's tax obligations, which is both a planning and running activity. We'll describe each group of activities in turn. First, transact. These are activities related to the exchange of money. There are a few major types of transactions, each representing a distinct finance activity. For one, getting paid, money in. Activities related to making sure the company receives funds are called accounts receivable, or AR. This is mostly about collecting cash from customers, but it can also be about rebates from suppliers, a significant source of cash inflows in certain industries like retail. Many businesses collect payment after the initial sale through a billing or invoicing process. AR will track these open invoices and intervene when there are issues like delays or underpayments. AR also makes sure customer invoices are paid on time and in full, which often requires an internal collections team. AR is the core piece of the broader so-called order-to-cash process, which describes all of the activities from making a sale to collecting payment. OTC is a more cross-functional and holistic lens, and many CFOs and other leaders will prefer to think end-to-end rather than in siloed steps. Too many unpaid bills? This might be an AR problem, or it might be elsewhere in the process. Say you're targeting the wrong customers or agreeing to the unfavorable terms and conditions. In a B2C business, say retail, payments are usually collected at the point of sale, and collecting payments is more highly automated. Companies can either use payment solutions providers like Stripe to do it, or receive payments directly into merchant accounts with the major banks. Of course, finance is also responsible for transactions going in the other direction, paying, or money out. This is accounts payable, or AP. AP covers payments to suppliers for both direct costs, goods and services used to produce whatever the company sells, the cost of goods or COGS, for example, and indirect costs, everything else, like corporate rent and office supplies. AP also manages paying out rebates owed to customers. Here, too, many view AP as a core piece of a broader process involving more steps, called procure to pay, or P2P, sometimes called source to pay, STP. Again, optimizing AP often requires close coordination with other steps, like vendor selection and price negotiation, and other teams, like supply chain or procurement. AP will not only process payments, they will also often help create controls around who spends company money, and on what, and how. For example, by creating sign-off procedures and expense policies. There are 2 other types of paying transactions, and 2 other sets of activities accordingly. One is when the company is paying for capital expenditures, buying assets like buildings or technology systems. This is called capital expenditures, or CapEx. It's also called fixed assets purchasing. This is a different type of purchase, since it requires planning and assessment of the asset value and accounting for the asset's depreciation over time. Lastly, there is paying employees. This is payroll, and it involves getting all of the details of each paycheck right, which is complicated by taxes, benefits, and retirement savings plan deductions. While payroll is classically a finance function, it can sometimes fall to HR, particularly when the mechanics of the payments themselves are outsourced to payroll management companies.